Hello and good afternoon, everyone joining us for this breakaway room. Welcome to the Small Business Growth Opportunities panel discussion. My name is Tshifularo, and I'll be the panel moderator for our discussion today. And by way of introduction, I'm the CEO and co-founder at SuperLead Advisory, which is a strategy and leadership consultancy. And until recently, I was at Direct Insurance, and I've held management and executive roles at MTN, Discovery Health, and One Life Insurance. I have worked for my teams as a management consultant at Deloitte Consulting, as well as at McKinsey and Company. And I also lecture currently part-time at Henley Business School, as well as at Gibbs. So for today's panel discussion, we all know that one of the key levers to ensuring a robust economic recovery, it will be an accelerated and inclusive growth of small, medium, and micro enterprises. These businesses have the greatest potential to create jobs, to empower women, youth, and people who are differently abled, and ultimately to reduce inequality. And we all know that, I think, at a macro level. But for many of us today, for many in attendance, a so-called small enterprise is our whole livelihood. It's how we manage to send kids to school. It's how, we sort of attain to our childhood dreams and make sure those are realized. And as you will all know, it's also what gives us nightmares sometimes and gives us untimely gray hair. So as such, today's discussion is incredibly vital for investors, for policymakers, for entrepreneurs, and for corporate leaders who are in attendance with us this afternoon. And for that discussion, we have a fantastic panel to unravel the opportunities on either side, either as investors or as entrepreneurs, to draw lessons from this time of COVID and perhaps to propose what we can collectively do and how we can do things differently as we think about investments and growth in the SME sector. So not only are we going to learn from our panelists, but we will also like to learn from you, our participants. And I would like for you to participate in this discussion. You can do so by posting your comments and your questions on the chat group. I'll be watching that chat line and taking in your questions and comments, because I think this is a collective discussion in as much as we have a phenomenal panel of experts, of people that do this for a living, with an entrepreneur and investors. I think there's so much more we can learn as if we sort of approach this conversation together. So I would love for you to participate. I would love for you to keep that chat line going. And to kick us off for this afternoon, we have got an entrepreneur, Anna Possa, who is a managing director at Dreamland Piggery. Anna, if you could perhaps just sort of give us your brief background and reflect on your experiences, and perhaps maybe just highlight what you have seen and what you know as something that entrepreneurs and SME owners actually need to thrive, and more so in this COVID economy, which from our discussion is more than just money. So Anna, if you could first introduce yourself and then sort of highlight some of your experiences on all the things that entrepreneurs need to thrive.
Okay, my name is Anna Possa. I am the managing director at Dreamland Piggery. Dreamland Piggery is a family-owned business. We are in the farming sector. We're doing pig production, maize production, and we've got an abattoir. We've got market with several chain stores here in Gauteng. We're living in a very difficult times whereby we have seen SMEs coming down and up again. With this unpredicted situation of COVID, we lost many of the SMEs. I am lucky to be still surviving because I'm in the agricultural, which is a food industry, and we've got a nation to feed. Whether there's this pandemic or not, people still have to eat. From my experiences, I've started as small as I can with the household production. I'm currently one of the commercial farmers here in Gauteng, whereby to be where I am, I was not all by myself. I have been, like they're saying, it takes a nation to bring up a child. I have been brought up by so many people. If I were to give my case to be where I am now, it took the government grants, it took the market by chain stores, example, Pick and Pay. It took the funding, commercial funder, which is APSA, through their enterprise development, and through Pick and Pay, they also have what SME enterprise development. So through those two and the government, and having some of the commercial farmers, especially as you know that the industry where I am, it's black owned. It's not black owned, it's mostly white owned industry. So I had to learn from some of the farmers here in Gauteng. Though as a farmer, as a small farmer, people would not take you seriously. But I've gone through all those, and I've been mentored in Denmark through B2B program. I've been mentored by some of the commercial farmers here in South Africa. Hence, I'm saying it takes a nation to bring up a child. So I am where I am because of all those efforts from different sectors, both government and private sector.
Fantastic. So Anna, you know, one of the things you said to me is you started, I think, with 4 pigs, and now you're farming in excess of 3,000.
Yes, the total farm, the total farm now currently where I am is 318 hectares, which I've leased from the government, and I'm farming that it's 300 sow unit in our agricultural terms. Those that knows agriculture will know, and those pigs will give you at any given time, you'll be like sitting on 3,000 stock.
Excellent. I think that's a phenomenal. I think that's a phenomenal achievement, and I really like how you stress the point that, you know, it takes a whole village to raise an entrepreneur, which I think it's almost like a starting point for our conversation today. And as you reflect on the journey of funding, because you have had the opportunity of being funded by different institutions, you have won incredible awards, and you know you've sort of had that village raise you. What would you say are some of the sort of challenges that you experience, learned from, as it relates to getting funding for entrepreneurs?
Yeah, in the agricultural space, the challenges are so many. The resources, naming funding is one of them. Access to land is one of them. The skill, the proper skill to do farming is one of them. I would also say infrastructure, because there are still some of the farms, and some of the farms in the rural areas are very deep, whereby if the roads are not accessible, take myself, I'm delivering meat. If I am to be in the rural, I'm fortunate because I'm here in Gauteng. If I were to be in the rural where the infrastructure, the roads are not good, I wouldn't be sitting here today telling you that I'm supplying the chain stores like the Pick and Pays and the Spars and some wholesalers. We still have having challenges on that one of infrastructure. The funding, I can write a book. If you had to ask me about funding, I am 12 years in this industry.
Yeah.
And yeah, I can write a book. I've been turned around. I remember there was a time where I couldn't even afford to get a loan of 5,000.
Sure.
Let alone now when I'm sitting here, I'll
Yeah.
probably be needing a loan of 100 million. So yeah, I'm happy that government is trying to unlock all those things, all those challenges, a bit by bit. The support that we got from government, it was not sustainable. Remember, underfunding is also a killer to SMEs. If you are to look for probably, let's say, you look 500,000, and then you're only getting funded 100,000, that does not talk to your business. That does not talk to the growth of your business. So all the time, the funders, they were sitting there thinking what they can do with us and deciding for us. And at the same time, most of the funders in the agricultural space, the funders could not fund agricultural activities because they're saying that they're too risky.
Oh, so thank you for that, because that's a key pivotal point to our discussion today. The fact that there are some segments of the SME space that are probably seen as not fundable. They may be too risky. Maybe they might not even have the right kind of documents to facilitate funding and investment conversation. However, we have someone in the panel today who has seen an opportunity in the very space. So this tees us off to introduce Andrew Maren, who is the CEO of Profitshare Partners. So Andrew, similarly, to start off by giving us a brief introduction of who you are and what Profitshare Partners do, and perhaps some of the lessons that you've learned as you unlocked these opportunities in the so-called excluded SME market. You have facilitated over 300 transactions in this space. I think we can learn a lot, especially investors who may have not thought about some of the segments of the SME space where you have found a lot of gold, so to speak. So Andrew, kick us off by giving us a brief introduction.
Great, Maanda, thank you. Thank you so much for the time and the opportunity. So what we do, we're Profitshare Partners is a fintech business. I started my career in banking, at a small stint in retail, went to investment banking, and then eventually ended up at private banking. And about 15 years ago, we branched out, took a team, and we started our own group of guys from the bank, started our own business enterprises. We invested in a couple of listed vehicles. We started our own companies. And in about 2013, I exited all of that. We sold off our businesses and we each went our own way. I then started the precursor to Profitshare Partners, which I sold to a listed company. It started in 4 countries on the continent, and I sold it to a listed, which was probably the precursor to Profitshare. And what Profitshare does is we are a fintech business. We focus on financial inclusion. We are able to fund without the need for financials, without track record, or without security. So we're like almost the preschool of finance. And what happens is most SMEs, and I'm sure Anna's probably told you, she can probably tell you a lot of these kind of stories as well, is that when SMEs go to a bank or a traditional funder, it's okay, show me your financials, show me your bank statements, show me your track record, show me your security. So, if nobody's willing to help these SMEs or these small businesses start up, how do they get the track record? How do they get the financials and so forth? And so what we then found with using technology, we are able to fund small businesses. We are this, as I always keep on saying, we are this not incubator, but this preschool. So we're able to fund our SMEs 100%. We help them, over 6 to 7 transactions. They grow to a point where they're sustainable and bankable. And our motto is we build our clients to lose them. In a lot of instances, we grow their turnover about 1,000% within a year. We take, we don't charge interest, so we take an agreed share of profit up front on a transaction. We help the clients execute, and then as they graduate through that kind of process, they become more bankable. We're actually working with a few banks in South Africa, 2 banks namely, that we actively pass on our clients to. It's become a reciprocal relationship where they give us their non-bankable clients, we make them bankable, and we pass it back into their world. So it's become quite a nice synergy. It's a different way to looking at funding. These are the clients that banks or traditional funders think they are unbankable or too high risk. We've proven that with this model over those 300 transactions we've spoken about, we've had a 0 performance failure, not a default rate, but 0 performance failure. So every single client that we've backed in those transactions has performed correctly to whatever they had to do. And many of them have grown radically in that space. And our bad debt ratio is probably less than 2%. So we've proved that we can. There is a segment in the SME sector, if you do it properly, that we can do this. We can create jobs. We can help other SMEs get going and actually increase the base of SMEs in this country, and do real financial inclusion.
That's incredibly awesome. Andrew, your story really inspires me every time I hear you talk about it. Andrew, investors in the audience today, they do have real concerns about the possibilities of losing money in this segment of the market. And we know, there's numerous statistics around the failure rate of SMEs. And you seem to experience a whole new different world of if it were. So perhaps really just to learn what you do and how you do investment differently. Maybe talk through some case studies, 1 or 2 really, for me, especially to be convinced that this works.
Yeah, sure. So the difference that we have is banks and traditional funders focus on your balance sheet. We focus on the underlying transaction. So in the underlying transaction, we look at who the counterparty or who the ultimate payer or who this buyer of the service from the SME is. And then we focus on what is the actual performance that this SME has to undergo. So using technology, we've been able to mitigate the performance risk. And that's the biggest thing that everybody worries about. Yes, you've got a transaction with this large corporate, but can you actually deliver? You'll only get paid when you deliver. Yeah. And so with using our technology, we've got a 0 default rate in terms of performance. From investors out there, it took me a couple of years before I could convince funders that, and especially banks, that we weren't competitors to them. We've recently had one of South Africa's largest banks give us a small line to test us out, and that's gone very well. We've had the SME Fund, which is South Africa's largest venture capital fund. They recently gave us a line of 100 million rand. And now, hopefully, which will be announced soon, one of the world's biggest banks has given us quite a large line that's to help, not just help us, but to help other SMEs and people like us in South Africa to extend this kind of funding to SMEs who can't access funding. And what we've got empirical data from the last 3 years, which we can prove our bad debt ratio. We can show how we protect our investor capital. So we've given our investors lots of confidence around the process, and we've actually shown the great success stories. Wary about mentioning names, but we've helped we helped create the largest Black-owned green energy supply in this country. They weren't able to raise any kind of funding from the banks to run their own business. We helped them on a number of occasions. They just exited to a large, they sold part of their business to a very large investment bank in South Africa. We've taken a client from 300,000 Rand in 1 year, and 12 months later, they were 25 million. We've got about 60 of those kind of stories where we've increased the client's turnover by 1,000%.
Sure.
And what's nice about it is because the clients that we help are usually the 1 or 2 people show, 3 people show kind of thing. So their job creation is very quick. I started a business. I've now got this something to sell to a credible party. They want to buy it. And as soon as I do my first deal, the next thing I need, okay, I can do more. I need some assistance. And so very quickly with very little money, we've seen that we've put in, we've had massive, our clients have reported massive amounts of job growth. So I think it's just the right support, the right capital, and in the right sector, right part of the market, we can really stimulate that part quite well.
That's incredible. I really love this idea of inclusive growth, stimulating the economy. And talking about stimulating the economy, our next panelist is Polo, who has been in the investment industry for many years. And Polo has seen, different kinds of businesses, SMEs of all types and sizes. And so Polo, in similar fashion as the previous 2 panelists, if you can start by just kind of giving us a brief introduction of who you are and the idea. And then soon after that, maybe reflect as you look back in this COVID economy. There's businesses that survived, and there are those that managed to be resilient. And you have really applied your mind in this, and you have thought hard about what makes resilient SMEs. And perhaps we can draw some lessons on both sides here. One on the investor front, perhaps in how they sort of look at opportunities, how to almost assess SMEs, and also similarly for SMEs on how to learn to be more resilient. So Polo, start us off by giving us your brief introduction, and then talk to us about resiliency for SMEs.
Great. Thanks so much, Maanda, and good afternoon, everybody. So I'm a founder of a company called IDF Capital, and currently its chairman. We've been around now for just about 13 years. And when we started the business, we were trying to solve the problem of access to capital for small black businesses in particular, and more specifically, black women-owned businesses. At the time, there were new opportunities that were coming to market as a result of the promulgation of the BBBE policy framework, which essentially meant that opportunities that black entrepreneurs and women did not have access to all of a sudden were coming to market. And the reality was that our traditional financial services sector was not quite ready to engage with that market for various reasons. If they want track record, the businesses would likely not have the track record. If they wanted collateral, the businesses would likely not have collateral. And the level of sophistication that your traditional institutions require to fund SMEs, would not be found at the time. So we're trying to solve that problem. And we started off, with very little money made available to us. At the time, we had just experienced the global economic crisis. So all investors were, becoming more and more risk averse, and they were trying to put their monies where they felt would be safe. And SMEs certainly did not fit the definition of a safe haven. So it was quite a difficult time to be fundraising for an asset class that has traditionally been like a swear word, and further exacerbated by the global economic crisis that we had literally just been hit by at the time. But for us, what was important was to really prove that you can invest successfully in this asset class. And I like what Andrew was saying about taking non-traditional approaches to understanding risk and mitigating risk, because that's what it's about. At the end of the day, financing of any business, whether it's a small business or a large business, it's actually about mitigating the risk of not getting off, the money that you put in. And it requires, some creativity. And the reality, again, is that your traditional funders, you can read that as banks. are not set up to be creative and be nimble and be responsive. And I think that's where players like ourselves who are, we started off being called an SME funder, where we provided in the main debt funding, and we have over the years evolved into a VC player. And we also do early stage, private equity, or rather private equity transactions, but still for small businesses. So we cover the whole continuum. And I think over the years, as the space started evolving and your type of entrepreneur also started evolving and becoming a little bit more sophisticated, and of course with the advent of technology being a main driver of whether it's traditional business or actually tech businesses actually being set up, we then started dabbling in investing in tech startups. And we very quickly realized that because the South African ecosystem, tech startup ecosystem, is nascent, it's not robust. In fact, at the time it was almost non-existent. At least now we're starting to see some pockets coming through. We were then not getting good quality pipeline, and we decided to convince some of our investors to allow us to allocate a portion of the VC funds that we were managing to actually go as early as providing pre-seed funding to tech startups. And we also, in 2015, launched a tech accelerator where we realized the need to help tech startups, black tech startups in particular, to help them with their commercialization, because it was important for us to prove concept, to validate, what it is that they were taking to market, and to really help them, put them in front of customers and help them to commercialize, and back that up with seed funding, which would be required for their growth. And post that, once they start maturing, then we would also then go in and provide, early stage VC funding. So that's really what we do, Maanda. And maybe I should just add that because when we started, we were known and we remain to be known as a significant player in the funding of women-owned businesses, we also were very fortunate that last year we were able to, for the first time, launch an SME private equity firm that is focusing on the West African region and the SADC region, focusing on women-owned and rather using what they call now a gender lens investing strategy, which is essentially investing in women. So we've been very fortunate that over the years we started out very humbly, and now we're managing in excess of 1.5 billion rand across the board. Yeah,
that's phenomenal.
We seem
and resilient.
Sure. I think what we have learned is first and foremost the importance of building cash reserves. I don't think a lot of entrepreneurs still live from hand to mouth. We saw with the first month of lockdown when we were doing an assessment of how much runway businesses had, and a lot of the businesses had a month or less of runway.
Yeah.
And very, very few could survive beyond 3 months without business.
Yeah.
So I think it is something that, whilst I think a lot of us understand the importance thereof, we have never really emphasized it. And I think it has become very, very clear now that you actually need to have a strategy around building cash reserves so that when a rainy day comes, you actually can sustain yourself. But importantly, if your business model requires pivoting, which is what we saw a lot of during this time, a lot of nimble entrepreneurs, especially businesses that are, digitally driven, where, we're able to change their business models or tweak their business models in order to respond to what the needs of the market were at the time. And in some instances, pivoting requires an additional cash injection. And if you don't have cash reserves, you might run into some trouble. And luckily, with us having the exposure that we have to tech startups, a lot of them who came to us during that time and had to pivot their models and required a bit of cash to help with that process, we were in a position to respond in terms of financing the changes that they needed to effect during that period of time. So I would say that, it is it is no longer fashionable, or it can no longer be a future plan to digitize your business, or to at least use technology as an enabler of your business. It has now become a necessity, because what technology has demonstrated during this time is that you can actually continue to provide your goods and services using technology if your business is already digitized or technology enabled. And I think it's a very, very important matter that we need to stress to all SMEs, to say that technology is no longer a nice to have. Technology has become a hygiene factor in business.
Excellent.
Yeah. Do you want me to continue? But I can leave it there. But maybe one last point, and I like the fact that
elevating the role of technology too.
Pardon?
Yeah, go for it.
Oh yes, and I was just going to touch on essential services as well. I think it is important for entrepreneurs to understand what types of goods and services will always have utility, regardless of the market conditions. Anna did mention that, whether there's COVID or not, people have to eat. And we have seen those types of businesses actually grow significantly during this period of time. And of course, we've seen businesses, particularly in the retail space, where it's foot traffic driven, literally dying and closing down. So I think it is also important going forward that we seek to start and run businesses that can withstand, at least as much as possible, any vagaries in the market.
Fantastic. So thank you so much, Polo. There's quite a lot of activities happening in our chat line. I'll just pick a few of the questions. I'll start off with Carl, who wants to sort of have Andrew back to ask him, how do you make SMEs bankable for investors, both locally and perhaps in foreign markets? I don't know if Andrew will be able to comment on the foreign market piece. But perhaps the principles might just be the same. Adele, I think, similarly wants to know, is there a transaction limit for the SMEs that you invest in and work with Andrew? And there was another question which says specifically, Andrew, for what you do, what's the cost to the entrepreneur? Andrew, do you want to just maybe address those three questions? And then while Andrew is addressing those, maybe we can have Polo back. Maybe just comment on the role of incubators for the SME industry. Andrew.
Perfect. Okay, so let me start with the easier questions around transaction limit. So we ideally, on the lower end, we look at a minimum of about 250,000 up to about 5 million rand, and that's per transaction. So we can do multiple transactions with an SME, but ideally somewhere between 250 and 5 million per transaction. How do we make them more bankable? So usually when a client or an SME comes to us, they've got some kind of order or a contract, and that's what we look for. So it's not somebody with an idea. If it is somebody with an idea, it's okay, you need to go and sell this idea first. And once you've got an offtake for it, once you've got a buyer for your product or your service, that's the time we come in. And what we've been able to do and how we made them more bankable is because we are kind of overseeing the process. We kind of might initially, depending on the client. So if the client, this is the first deal that they've ever done, we micromanage the deal quite a bit versus clients that may have much larger turnover, been in business for quite a while, but they just can't access additional funding. So say for the smaller startup kind of guys, we micromanage the guys quite a bit and help them execute on their transaction.